what's coming. What's your view on BlackRock? I'm thankful for you. Again, in a weird spot. Like I can, I don't know how much I could say and not become a problem. I think BlackRock is a lot more involved with all of this than people really realize. And it sounds, based on your question, that you probably know that too. The way that I would relate this to people is, after 2008, we had the GFC, right? And in the GFC, we had a lot of problems. It was a recession here in the U.S. People lost jobs. It was a bad deal for years. Wasn't like the Great Depression, not quite as long. Still pretty bad. So what BlackRock was put in place basically to hold up the economy. China can buy stocks directly. Their government can buy stocks or whatever they need to do. They don't need a proxy. BlackRock kind of sits in that position as the public-private partnership between the U.S. government and stability in markets. And they use them to repackage the debt over the past 20 years in order to, take a little bit of bad debt and put it with a bunch of good debt and then sell it off. And the bad debt's still going to go bad, but there's enough good debt around it that it's not going to crumble the financial products. That's only going to go on for so long. They're going to continue to have to print money in order to do that. So you need some way to be able to reset the monetary system. In the past, when they've done that, they've, took gold from the American people, and then they repriced gold, and then they used that as a peg to back the dollar. There's not enough gold at this point for the amount of M2 money supply that there is. And you could say, cool, we could have a huge reduction in, the M2 money supply, which I think we will have some, or a deflationary collapse, which is also bad. You need some way to jumpstart the economy and also reprice things, and be able to offset the monetary obligations, because there's a ton of boomers and people that have large financial plans, pension plans, 401k, IRAs, and if they get a 50% haircut here or more, and it's not the same value, so like a 50% drawdown in stocks by itself is bad, because the cost of living stays the same. But if we get a cost of living drop alongside that, relatively you're still just as wealthy, right? I think that the latter piece of that is what's going to happen when they shore things up with our currency, and we have instant settlement. And they're also going to be a revaluation of assets on balance sheets. So you have all these huge unrealized losses today on investment banks' balance sheets and governments' balance sheets. If they had an asset, they're not even going to have to reprice it. They just start to have to use it, right? And they can, through a supply and demand shock, they can push the price to the level they need it to be in markets. It can be a short squeeze on XRP effectively. And then once it's a high enough price, they can start using it to be able to settle value and maintain a price floor at that level. And then that asset is on their balance sheet at this much higher price to offset the liabilities.